Hello. So welcome to this session. Hello. So welcome to the channel. If this is the first time you come in the channel, I'm excited to have you on the channel. It's been a while I posted a video, and I decided to do this to just kind of spice things up and just show you something I feel is going to be beneficial to you. And I'm going to show you a strategy that if you backtest this, and also, if you learn this, your trading journey is going to be changed forever. I literally mean it forever. Okay, so without further ado, let's get right into what I want to show you today. Okay, so now here on the screen, I have two models I'm going to be showing you. So the first one is this one. So I'm going to be showing you this, and then I'm also going to be showing you this on the chart. Okay, so now this is the thing. Now the thing about trading is this. Trading is something that everybody wants to learn, and because everybody wants to learn, you have 1,001 ways, of how people trade the market, from those who use indicators, to those who use patterns, to those who use, algorithms and different things that people use. But one thing I can tell you is this: the simpler you trade it, the faster you become profitable. Okay, so if you want to become somebody who's going to become profitable, all you need is not a lot of indicators, a lot of indicators on your charts, a lot of lines on your chart. You just simply need to keep it super simple. And this strategy I'm going to show you is something that if you test it on literally every pair, you're going to see that this repeats itself over and over and over again. Okay, and all you need to do is to be able to stick with it. And if you're able to stick with it, you're able to stay disciplined, then your trading game is going to take a completely new turn. Now I have this here. Now let me explain this. So here you can see on the chart that we have here, this is obviously a bullish trend in market. Okay, and I'm going to show you I'm going to draw this, of course, for you for a bearish trend in market. So now let's look at what we have here. So clearly you can see here that we have, higher highs and higher lows. Let me get this tool here that I can use. Where's this guy? So here we have, you can see higher highs, right? Okay, higher highs, and we have higher lows. So right here, okay, we had this low, but then here you can see price came and took out this low before we had this push to the upside. Okay, so price taking out this low essentially now gives us a sweep of liquidity. In other words, this low swept this previous low before it created a new higher high. So this essentially now created a sweep of liquidity. So the first thing we're going to be looking at here, and I need to put this in writing for you. Now, let me tell you something. If you have people who know these things, you're literally going to be unhappy, seeing someone share this. But anyway, so the first one we're going to be looking out for, before we look out for liquidity that I just mentioned, is structure. So the first thing is structure. Okay, let's change this a little bit to, yeah. So the first one we're looking out for is structure. So you want to look out for structure. So if you're able to establish the structure, in other words, you're able to establish the trend, the bias of the market. Is it a bullish market or is it a bearish market? That's the first thing you need to understand. If you're able to establish that, then the second thing you need to look out for is liquidity. Okay, so here we're going to say liquidity. And then the third thing after liquidity is you want to look for inducement. Okay, inducement, just inducement. Okay, so three things that you're looking out for. Number one, structure. Number two, liquidity. And then number three, inducement. That's what we're looking out for this model to work. So clearly here we've established the first thing, and the first thing we've established is the fact that the market is trending bullish. So we know it's a bullish market and we're looking for trades in the direction of the bullish trend. Simple, right? So for bullish trend, I want to believe you already know what the bullish trend is. So for example, you have low, high, low, high, low, high. That's a typical ideal scenario bullish trend, but we know, of course, the market doesn't just move like that. Okay, but this is a typical bullish trend. So in other words, the market is just moving upwards, right? So that's bullish. And then of course the reverse is the bearish trend. Okay, so now we have this clearly, we've put that, we've laid that out clearly. So clearly here we know, number one, the market is bullish, so we've established structure. Number two, liquidity. Now we see here that this low was taken out by this push here, which created for us a sweep of liquidity, essentially creating what we now call a sweep zone. So this candle here that took out this low now created a sweep zone for us. So we've established the second thing. Now, what is the third thing we need to establish? The third thing we need to establish is inducement. Now, you can see here that after price took out this low, then we had this push to the upside. Okay, and after this push to the upside, price now pull back a little bit, creating for us what we now consider here a minor structure. Okay, and if I can just use a tool here, let me just use this guy. Okay, so you can see there, so price was created what we call a minor structure, and now that minor structure essentially for us, it's what we now consider as inducement. Okay, so I'm going to explain further, but now just get the first thing. We've established the first thing, structure. We've established the second thing, liquidity sweep. Okay, creating a sweep zone leading to the creation of a sweep zone. And then the third thing now we've established is the inducement the price is created by the creation of this minor structure here that led to this high being taken out. Now after that, what do we expect next? We expect the price will return into the sweep zone that was created. Now let me also just add here liquidity plus sweep zone. Okay, you understand what I mean? Because when we get here a sweep of liquidity, when the market sweeps liquidity, it automatically creates a sweep zone for us. So after this was swept, this low was swept, price created a sweep zone. So in other words, that zone now becomes protected. So we're expecting that price would not take out that zone. Essentially, that's what we're looking forward to. And then secondly, we're also expecting the price will return to that sweep zone before the continuation of the trend. So now after the higher high was created, we expected that pullback, and the pullback played out here, and then essentially price returned into the sweep zone, and then boom, it pushes out. Of course, it may not be straight all the way like this. You may have all the whatever the trend before you have to push the upside, but you get the gist. So this is essentially what we're looking for. Now this is something that repeats itself over and over and over again in the market. You can pick any pair of your choice, whether it is forex pairs, indices, cryptocurrencies, whatever it is. If you're able to see this, once you begin to see this, you can't unsee it. Okay, so now that's the first one. Now this structure might repeat itself in different ways. Okay, I'm going to show, of course, the bearish structure too. So the same thing, we're going to take this, we're looking out for the same thing. Okay, so the same structure. So here let's have, look at this. So here, what do we have here? You can see here we had low, high, price pulled back. After this high was taken, pull back, created a minor structure here, took out the previous low, created a sweep zone, pushed out, created an inducement for us, and then took out the previous high. So once we see this, we've seen the sweep of liquidity, we've seen the creation of the sweep zone, we've seen our minor structure, which is our inducement. Now we expect that price will pull back into the sweep zone, and then we get our continuation. As simple as A, B, C. I know that's people will say that's cliche, but yeah, it is what it is. Now all you need to do is to be able to see this in the market, and if you're able to see this, then you can take advantage of this. Now the next one I want to show you is this. Sometimes you may not have, for example, here you can see we had this clear higher high, low, higher high, and then sweep before the continuation. Sometimes you may not have something like that. Sometimes you may have something like this. Let's say you have here high, and we have, let's say, low. Let's have this, and then we have this, and then we get this. Yeah, something like that. And then let's say we get this. Okay, and let's say we get this, push to the upside, and then we get that pull back, and then we get that push out. Now I'm going to explain this, just follow me. Okay, so let's say, excuse me, let's just leave it here. Okay, let's say this is the structure we get. Now let me explain this. So here you can see here we have this high got taken out, right? Break of structure, another one here, you can see that. So essentially we had two break of structure, right, in direction of the bullish trend. Now, but what do you notice here? What you notice here, that this was the low that took out this high, right? But then this low, we had a minor structure here where this low actually took out the previous low. So essentially for us, creating what we don't call here liquidity sweep, correct? So it swept liquidity, right? But this wasn't like a full blown structure like this where you had this low and then high and price, took out this low, different style, different structure, essentially. So this was the same, structure, yeah. But then we had this minor structure here that took out another structure, within the same move. If you explain it that way anyway. So you have something like this, and then we now have here, of course, that sweep automatically created for us a sweep zone, which I believe you're very familiar with now. And then we have here our inducement. Okay, so you can see that there, our inducement, essentially price now returned after this high. We have the inducement here, price returned. Now, why do we call this inducement? For those of you who may not know why this is called inducement, the reason why it is called an inducement is because a lot of the time when you look at, let's say, a bullish trending market, let's say we have something like this: high, low, high, low, high, low, right? And then let's say high, high. Now, what the typical average trader would do is that, okay, I see the market trending in the bullish direction. So if the market comes back to this low, I'm gonna buy and then take, ride the trend. If it comes back here, I'm gonna buy and then ride the trend, and it continues like that in perpetuity, ideally, right? Now, in the real market scenario, a lot of the time this may not be what's going to play out. So what you're going to wait for, or you want to see to kind of add to the confluence of the confluences that sort of increases the probability of your trade working out, is the sweep of liquidity. So once we're able to see that the structure has swept liquidity, and that sweep has also led to a break of structure, we can now be more confident that that structure is going to play out. Okay, at the basic level, that's just what you need to understand. There are different complex structures that I wouldn't have time to go into this video, but I just want you to just stick with this, what I'm going to be showing today. Now, let me take this out of the way. Okay, so now this structure here, you can see it's different from this one that I explained earlier here. And let's just show a few things here. So where's my brush? So here we had, this is the major, oh, what's that? Okay, this is the major low that led to this high being taken out. Then we have this here, this low led to this high being taken out. You see that? And then price returns and uses this low as inducement into the sweep zone. That is simply what an inducement is. Okay, an inducement is just saying the market or price uses a certain structure, has inducement into another structure. So we have here the liquidity sweep, we have a sweep zone that was created. So price essentially used the structure above it, has inducement into the sweep zone, into the sweep zone that was created as a result of liquidity sweep, and then before we get that push to the upside. So essentially that's what inducement is. Now price comes in here, and then we have our low below, of course, this sweep zone here, and our target can be 1 to 3, can be 1 to whatever, depending on our trade management and all of that. And that's it. So price comes in here, tags us in, and then pushes out. Okay, and then when profit, hopefully, smiling to the bank. Now this is essentially what it's like, okay, to trade this mode that I've shown you. Now there are different intricacies in terms of maybe what it would look like, what it may not look like, depending on market conditions and all of that, but I wouldn't want to go into all of that detail here. You can flip this the other way around, and then you get the same thing for a bearish trending market. But the most important thing, like I've established earlier, is number one, what do you look out for? You look out for structure, then you look out for liquidity, which often leads to the creation of a sweep zone, and then you look out for inducement. When you have those three confluences in place, then I tell you, you're going to be smashing it in the market. Now this is all theory, so all said and done, let me show you this on gold, okay, practically how this plays out in the market, or how this has played out, I would say this week and also previous. Literally, it has been playing out for a while because gold has been bullish. So let me show you how this plays out in the market. So just a second here. I have a lot of drawing here, so I'm going to show you. Okay. By the way, this is what a lot of people pay for, right? Well, here we are, we're getting it for free. Okay, so let me show you this. So here you can see, and this is of course hindsight, okay, because we're simply just looking at what has already played out. But you can, and that's, you can simply just take this and backtest this. If you backtest this, I'm going to share the chart. I'm going to take a screenshot of that chart and put in the description somewhere, so you can just look at it. And this is also a good opportunity to say, if you've watched this video up to this level, I want to also encourage you to, you know, join the Stock in Profit program. You can join the free Discord group. And then if you want to, you know, deep dive and also increase your trading knowledge and become more consistent, you know, in your trading, all of that, you can join the Stock in Profit program. And when you join the Stock in Profit program, you'll have access to me like eternally. Okay, now, so if you join the community, even if your subscription, you know, expires, you still have access to the platform where I share trades, you know, daily analysis and all of that. So hey, you can check somewhere in the comment section. You have in the description, you have the link, and yeah, we'll see there. Okay, so that said, so here we have the structure. So what do you observe here? Let me just bring this down. Just make this 1, 2, 3 thereabout. Okay, so what do you observe here? So you can see here that we have, okay, price was bullish, or as bullish, so low, you see that, high, sweep of liquidity, creating a sweep zone. Okay, now price pushed out. This is really subtle, but this was a pullback. After this high, price pushed out, we had this little pullback, and then we have this high and pullback here, a high, and then price returns all the way back, taking, you know, this inducement essentially. You can also regard this, you know, as an inducement. This minor structure as an inducement, and also this as inducement. Price returned into the sweep zone and then pushed out essentially. Okay, so if we take this out, you see that this is essentially the same thing I just explained a few minutes ago. And let's draw this out so we see all that played out. So here we have liquidity sweep. Can you see that? We have here break of structure, another break of structure, and then here we have inducement. Can you see that? As clear as day. Okay, and this is our sweep zone. Price returns into our sweep zone, taxes in, and boom, price pushed out. You see that? The same thing that plays out here. We just basically took out our structure out here. I'm going to show you also another one here. Now, there are different models, and sometimes you may have, it may not play out exactly depending on market conditions, you know, the session time and other things that we don't have time to explain here. But I'm just going to show you the model, you know, the trades that played out according to what I just showed you. So let me show you another one here. So here we go. So you can see here that we have high, low, high. Can you see that? Low. Can you see that? Now this was the second structure I showed you. You can see here, high. Oops. Oh no. Let me just repeat that. Okay, so let me do this from here. Low, high, price pullback, low, high. Did not take out, you know, the structural high, pull back and took out this low, essentially creating a sweep zone for us, and then pushed out. Do you see that? And then after that, what happened? Oh, sorry, there was, you know, look at all this pullback here, creating a sweep zone first. Anyways, let me see, I'm gonna adjust that. Okay, so we had this pullback here, price pulls back into this, and then boom, we get the push out. Okay, so let me just fix a little. Let me just fix this. So we had here, can I actually fix that with this? I hope so. Okay, so we got this was the inducement, and then we got that push into the sweep zone, and then price pulls out after that. Okay, so you can see that. So this is essentially it. So if we pick everything here, let's just take this out. You see the same thing I just explained. Okay, so let's see what we have here. So this here, okay, liquidity sweep, and then we have here our breaker structure, and then here we got our inducement. You see that? Okay, liquidity sweep created a sweep zone for us, price returned into it and then taps it, and then boom, price is gone. So that is essentially okay, and you see this play again over and over and over and over again in the market. Okay, now let me show you another one that played out today, and it's still playing out actually, because it's yet to, price is yet to do whatever it's meant to do. So here for this one, okay, I didn't really show this model, but let me see, is this part of what I just showed you? No, this is another different model. So yeah, so but anyways, you get the gist. So gold has been trending bullish. So the first thing, structure, like I mentioned. The second thing, liquidity, in sweep zones, and then the third thing is inducement. If you master this three, structure, liquidity, okay, inducement, I tell you, you're going to be super profitable in the market. Okay, so here I want to believe this has been beneficial to you and you've been able to pick something. You'll be able to pick a thing or two from this. So hey, let me just leave the screenshot for you. Where's this? So I was gonna share this. Let me see, where's this? What is structure? Okay, yeah, so this one. Okay. So I'm just gonna take a screenshot of this. The screenshot now. I'm just gonna take, yeah, screenshot of the chart, and then I'm gonna put in the comment section. So the link will be somewhere there, so you can just have access to this. But if you master the structure and you learn how to look out for this in the market, I tell you that your trading journey or your trading game is gonna take a different turn. So hey, I want to believe you picked something from this. Do not hesitate to like, to share, leave a comment. If you love videos like this and you want to see me do more of such videos, leave a comment, and then yeah, I'll be dropping more content yeah, in this direction going into the future. All right, so it's been a pleasure, and see you in the program if you choose to join the program, or see you in the Discord group. All right, bye bye, stay stuck in profit, and see you. Okay, so just before we go, I think, yeah, I'd mentioned this, but the trading program, stock and profit trading program, is something you can take advantage of. So if you want to join the stock and profit program, just check the description. You also have a discount. I think there are a number of promos running. So depending on when you're seeing this video, they may be valid 10%, 15%, 25%. So take advantage of it and join the program. You have access to trading floor where I share analysis and every day, and then you also have access to the course. You have access to the Discord where you can ask me questions, we can interact, we can share stuff. So you have access to a lot of things. So I look forward to seeing you in the program. So please share this, like it, comment, and let me know that this was beneficial to you. I wish you all the best. Stay stuck in profit, and see you some other time. Bye bye.